the one day I don't test the sound and it doesn't work. So anyway, big thank you for people for letting me know. Here I go. We're going to talk about Bitcoin and Bitcoin miners, whether it's better to go YOLO into miners and which ones, or stick with Bitcoin. A lot of people keep pinging me saying, what's going on with the miners? How come they're going up so fast and Bitcoin staying flat? What is the situation? And it is a hot topic right now. But before we jump in, we'll remind you all that this is edutainment. And there's a band called The Jam, and it would be great if somebody could make a song. What is the song? This is entertainment or something. This is edutainment would be funny. Anyway, I'd probably be infringing some copyright stuff on that. Anyway, this is a story of debt and capital efficiency. But just to talk about the significance of miners and mining lately, if you take the headlines just over the last week, they are stunning. There's a whole bunch of stuff. So I always say mining is a cutthroat business, but the swings are so violent in the mining stocks. It's just so much fun to trade, and did a couple today as well. But there's just so much happening in the mining space. And if you're in Bitcoin and crypto, you got to know about this. So first of all, I think Block completed the design of a 5 nanometer Bitcoin ASIC chip and plans to open source this mining technology. That is big news. The Bhutanese government covered that last week. They negotiated a deal with BitDeer for 100 megawatt of power for a new Bitcoin mining center. Nobody even knew what the Bhutanese government was up to up until a couple of weeks ago. Also, there's listed Bitcoin mining companies. We're going to cover them all today and look at some key data. They're not selling their Bitcoin anymore, despite hash rate reaching 58.6 exahash. They are beginning to hold. And now they were dumping all the time so they could buy rigs. Now they're beginning to hold, and we'll analyze that too. Also, President Biden, the US president, proposed a 30% punitive tax on crypto mining operations. Yeah, okay. And in response to that, GOP presidential candidate, or he might be, I think he's Democratic, he's not GOP. I'm not even too sure. I don't follow politics that much. But he opposed Biden's plan for the crypto tax. Kazakhstan, they collected $7 million in crypto taxes from miners in 2022. So there's money to be had from this. Stronghold Digital launched another 4,000 rigs. And now they added, I think, 400 petahash to their capacity. Iris Energy blew up to 5.5 exahash. They are growing fast. We'll look at Iris as well. And TeraWulf increased the hash rate to 4 exahash too. So a lot of scaling is happening. But before we jump into that, let's look at Bitcoin and some good news I did promise you on Bitcoin performance. Here, these are the Bitcoin returns per month. And the last time, I know people always say this time is different, but the last time we had 4 straight up months at the beginning of a year was 2013. Okay? And Bitcoin did a 6x alone in just October and November of that year. So pretty stunning, actually more than 6x, because it went up 50% and then it went up 450%. So too tired to do the math in my head right now, but that is very, very impressive. So this is definitely started off to be a very, very good year, and we expect things to look really good as we go forward. Now, why are people so interested in Bitcoin miners? Well, this chart pretty much says it all. This is the Bitcoin divided by CleanSpark pair, just one I pulled as an example. And in 28 days, it is down 52%. Now, so people understand what this means. That means CleanSpark has doubled in the time that Bitcoin has kind of languished a little bit. So technically, there should be a correlation between the Bitcoin miner and the Bitcoin price. But nope, we have huge, violent swings, and that's why these are so fun to trade. In fact, the swings are even more violent than MicroStrategy against Bitcoin, which we also like to trade too. And that is the sport that we are in here. Now let's look at some news. Speaking of CleanSpark, they just announced earnings, and it is a beat. And CleanSpark is up after a whopping 15% up day. They're up a little bit in after hours too, up about 2% to $5 a share. Remember, this thing was about $2 a few weeks ago, which is insane. But they did report a loss of $18.5 million. Remember, they're investing to build rigs. And they lost 23 cents a share instead of 37. So that's actually a beat. It's nearly a 40% earnings surprise, even though it's confusing to look at it that way. But the 37 cents was a more negative number than what actually came in. And the revenue came in at 42.5 million in the period. And remember, I can't remember the exact loss. I think, 18.5 million. So it won't take a lot more Bitcoin price up action before they become profitable. And at the very end, I'll talk about PE ratios for companies that mint a huge amount of money per month. This is why the calculus for miners is so interesting and fascinating. But they are moving targets. They are all different. They are all levered differently. And you got to really watch them carefully. So let's talk about the money making now. CleanSpark didn't have, I haven't read their transcripts yet. They're coming out, a few minutes ago or something, or the next 24 hours. I can't remember. But they haven't availed of the full ordinals frenzy that happened over the last couple of days. This is from the 8th of May, i.e. 2 days ago. And you can see here the total fees were 6.717 Bitcoin, and the subsidy and fees was 12.97. So basically the fees were larger than the actual block reward. And that is technically good news for miners. Some people think it's bad news. Some people think the fees are so high now it may discourage people from using it, but still it is very, very cheap compared to other ways of moving things around, and even many other chains too. And people also think the fees are being artificially inflated by spammers, and they could be used to attack the network. And there's people that are very unhappy about the kind of ordinals code that's now capable within the platform. But one thing is for sure, Bitcoin is changing, and it's time for us to adapt as well with that change. And eventually, as the block reward gets smaller and smaller, miners will rely on fees. So it's a good test, in my opinion, to see exactly how this all shakes out. So let's look at where we are in the Bitcoin market. And this is the IA top and bottom model. We're moving up. Now, I added a big fat blue line to the bottom there. And typically, the blue line is the bear. Now, if you look at previous bear markets like 2018, we were down in the blue for a long time. It was like almost dead on arrival. Some people thought it would never recover. And then we had the dip before January 2020, and then the C19 dip, and then off to the races. And then we had a number of black swans that took us down. But when you look at the perspective, we were down the doldrums for circa 5 months badly. Yes, the price did go down, but now we are clearly out of the bear. And the data also shows that too. Let's look at the miner reserves. I did touch on in the beginning that they are beginning to HODL Bitcoin again. And I added a green arrow on the bottom right here to show that tiny little uptick in Bitcoin miner reserves held by miners. And this is after a very brutal long downtrend. But when Bitcoin is cheap and you have to scale your capacity, your hash rate, so you can mine more as price rebounds, that's what they did. They sold everything they could to be able to buy rigs. And the hash rate has been up and to the right, but that also has taken a little bit of a breather. We did hit a record high a couple of weeks ago, but now the network is more secure, but it has come down ever so slightly. But we shall see. And just in watching, I see a tiny uptick. I'll show you in the data how certain Bitcoin miners started to HODL again, which they haven't done in a long time. So I'll prove it with numbers too. So it is a tiny uptick though. Let's look at the mining companies we'll look at. So you can see here today, CleanSpark was up 15%, Marathon 10%, RIOT 8%, Bitfarms, etc. HOT, HIVE, Argo. And I also threw in there Bitcoin, flat on the day, and a Bitcoin miner goes up 15%. How is that possible? This is why all these questions are coming in. Should we just invest in miners? Is this going to continue? Where should we go next? So we see. Let's look at miner production through April 2023. This is how many Bitcoin each Bitcoin miner has mined. And you can see as the hash rate goes up, even though some of the bigger miners have a lot of hash rate, their production has gone down. So if you look at all the difference between, say, March and April, even from January, many miners are producing less Bitcoin because it's getting more competitive because the hash rate's going up. But there is one exception to the rule here. Look at that blue line. I made it a little bold. That is Iris Energy bouncing back. They had huge production back in, October? And then they fell down. Now it's bouncing right back up again. That's going against the trend of all the other players. You can see the top three as well are Marathon, HIVE, and CleanSpark up in the top right, and exactly how many Bitcoin they produced each month. But also remember, the price of Bitcoin has gone up an awful lot since a few months ago. So now the price is nearly double from what it was back in January, December. And so they're making a lot more money too. Let's look at a couple of key metrics before we get to the really juicy stuff today. So this is Hashrate and Bitcoin Mined. So I always use the simple little chart here. And the easy way to read it is Bitcoin mined per month is in red and the hash rate is in blue. And you want the red to be above the blue. When the blue is above the red, they're not very efficient. And when the blue matches the red, they're not as efficient as the top 3 leaders here. So per this chart, you can see the winners are Bitfarms, CleanSpark, and HIVE. In fact, HIVE is doing exceptionally well lately. They've really come into their own. And as you say, it's not getting, that's the easy way to think of it. It's like, you know, the expression bang for the buck. This is Bitcoin for the hash. So that could be a t-shirt even. Bitcoin for the hash. Let's look at the Bitcoin mined per exahash in April 2023. Again, that winner is HIVE. They are mining more Bitcoin per hash rate than any other player. How do they do that? I don't know. But they're very efficient, and we like to see that. CleanSpark is number 2, and Bitfarms is number 3 on this simple little analysis. Let's jump forward again. Let's look at market cap per exahash. And this is how many exahash of power they have based on the market cap. Again, another measure of efficiency as we go forward. And you can see here, you want the number here to be small. Okay, you don't want it to be large. Look at RIOT. They have a huge number. HUT have a huge number, but you want it to be really, really teeny. And that means you're super, super efficient and you're also undervalued in the stock market. Most important. Winner here is Argo. Iris Energy is number 2, and then Bitfarms is number 3, and CleanSpark is number 4. Last time I did this, CleanSpark won it. But remember, the CleanSpark price has gone up from like $2 to $5. That increases the market cap, and the hash rate has been stagnant around 6.7 exahash for CleanSpark. So remember, everything is a moving target. So you got to keep that under consideration too. Let's look at the miner performance over the last quarter. We can look at a year, a quarter, year to date, etc. But the last quarter is most interesting because we're really looking at here in answering the question, well, is it better to own a miner or Bitcoin? And you can see some names have exploded fast. For example, WULF up 164%, RIOT 122%, Iris Energy 109%, Marathon 80%, CleanSpark 62%, and Bitcoin's only been up 27%. And then you have the laggards. In fact, MicroStrategy has slightly underperformed Bitcoin by a tiny, tiny fraction of 0.03%. So they're tracking really closely. Bitfarms only up 20%, HUT miserable 4.9%, HIVE miserable 4.67%, and Argo down 30%. Remember the importance of that last chart I showed? This one, the capital efficiency, you want that little blue bar to be small. And if it's big, there's not a lot of upside. We'll talk more about that later too. So let's talk about Bitcoin miner correlations, and a big thank you to Econometrics for this great little chart. So this goes back to 2020, and it shows you the correlation between Bitcoin and other mining stocks. And it has been increasing in recent years. Back when the miners first came out, nobody really knew how to analyze them or value them, etc. But that seems to be getting sharper and sharper. And in 2023, all of the stocks listed on the chart have a correlation of 0.4 or higher with Bitcoin. You know, 0.4 is 40% of the price action, as explained by the price movement of Bitcoin. So it's still very small, and there's a lot of opportunity for arbitrage as well, which is what we like here on this channel. This means they are all indirectly exposed to Bitcoin and could be reasonable picks for investors who want to gain exposure to cryptocurrency. However, not all of these stocks are created equal. Some miners are more likely to survive than others, and the factors that will determine which miners survive include the efficiency, the effectiveness, their access to cheap electricity, the amount of debt they have, the amount of financial resources they have, the regulatory environment they work in. Some states in the United States or other parts of the world, they're not friendly to crypto miners, so you got to watch all that too. So it's not trivial to analyze these assets. Now, last time I did this last month, I looked at the debt loads, and you can see some of the names here. Quick summary. You want to watch those with very high debt loads. WULF has a high debt load. Marathon has a high debt load. Argo has a high debt load. And Iris isn't too bad, 35%. So, but watch for the ones with very high debt load. I was pleased to see, Econometrics doing the same thing. So this is his or her analysis of the Bitcoin mining industry, and you can see the wide range of debt leverage. So the two largest miners, Marathon and RIOT, are at opposite ends of the spectrum. So the Marathon has very, very low debt leverage. That is at the very bottom left. And on the top right, you have Marathon. Now, this is because miners with lower debt leverage are less likely to go under if the Bitcoin price falls. However, even miners with low debt leverage can go under if they do not generate enough free cash flow to cover their debt payments. So important. That's why we look at the amount of return they get per exahash and how that compares to the actual market cap of the company. And this is where levered cash flow comes in real handy. Levered free cash flow is the cash flow generated by a company adjusted for the debt payments they have to make. So this is really neat little analysis. And again, I'll show you later where you want to play and where you don't want to play. Now, let's look at the ability to service debts, like pay your credit card and your mortgage every month, etc. The miners have the exact same situation. And here it is highly competitive, and miners are constantly vying for market share, and they need more hash for that. And some miners are taking on too much debt in an effort to expand their operations. However, we know that's risky. If there is financial difficulties, high interest rates, missing payments, people can come in and claim their assets. And that has happened a few times last year as well with some miners. Now, it is important for investors to carefully consider the miner's debt leverage and cash flow before investing. All right. So if you look at this, the ones in the top right corner, they find it very easy to service debt. They are HUD8, CleanSpark, HIVE, no problems, DigiHost. The ones that have a challenge servicing debt are Marathon, RIOT, Iris Energy, Cypher, Stronghold, Bitfarms, it's TeraWulf, etc. So again, this is directly correlated to my previous graph here, where I showed all of the debt loads, as I call them. So we are so far on the same page. Let's look at it. One of my favorite ratios as well is the Bitcoin HODL bags versus the HODL as a percentage of market cap. Now, if you look at the big standout one here is HUD8. They have 64% of their market cap is actually Bitcoin, which is massive. The only thing I know that's bigger than that is, of course, MicroStrategy, where sometimes their HODL bag is more than their market cap because they have some debt. Now here, also Marathon, you can see they have a larger HODL value, but they have a much higher market cap. So the percentage of market cap that Marathon has about 18.47, and then RIOT about 10.12% of their market cap is in Bitcoin, HIVE 21.46, and CleanSpark got off zero for the first time in a while. They have 2.61% of the market cap is in Bitcoin, Bitfarms 4.7, etc. WULF and Iron are selling everything they can as soon as they get it, but that is the point that is reflected by the little uptick in the chart I showed at the very beginning, that they're beginning to hodl. Players that used to not or have been selling, they're beginning to hold again. Now let's look at growth potential. Again, where to play, where not to play. If you look at the market cap here, the big ones, and again, going back to the very early chart I showed, the relative, let me pull this up to make sure you guys remember, because a lot of stuff is easy to get lost. This one is the miner production, okay? And the other one that's very, very important is the hash rate and the Bitcoin mined per hash rate. This all ties directly into what we're talking about here right now. And if you have a company with a lot of market cap, but not that much hash rate compared to other ones that are coming up from behind, that means there's upside for the smaller players. So I added a big green arrow saying play here, but not here, because the big guys like RIOT and Marathon, because of their debt loads and their capital inefficiency, etc., are going to struggle going forward based on this analysis. And where you want to play, things like ones with high growth potential. The author of Econometrics believes because their market cap is small, they can grow fast to the upside. But I have a different ratio I prefer to look at. But anyway, where to play based on color codes, kind of CleanSpark, Iris, BitDigital, Argo, DigiHost, Stronghold. but it goes a little bit deeper than that. And what I like to look at is the key. This is my favorite mining ratio of them all. And nobody has ever done this. I think it's unique to me, but I've been using it for ever since I started analyzing miners. So in contrast to Econometrics, I think the most important ratio after market cap over exahash is, that's my second favorite by the way, is Bitcoin ROI over market cap per month. So when you look at this chart, the folks that are making, like Argo, are making over 6.2, 6.3% of their market cap per month from mining Bitcoin. CleanSpark is number 2. They make just shy of 5% now. They were 6.15% last time I did this. And Bitfarms, again, is number 3, just over 4% ROI. But why is this important? And the answer is as follows. So let's look at a little bit of math. It is a math channel after all. This is the crazy price to earnings math of, say, 6% return on investment over market cap per month. The annual ROI of that is 107.16%. That is 107 times the market cap based on the ROI they are making per month, which means the PE ratio based on this ROI per month at a bare minimum should be 47. So if you have a miner making a profit, say for example, they make $1 per share, hypothetically, which is very feasible with many of these names, and you take that dollar, you multiply it by this, because how much they make an ROI for market cap, and the stock is trading at $2, it should really be trading at 47 based on this financial theory. Now, the problem is, as the market begins to realize how much money these players are making, the market cap will go up, and this will be compressed. But remember, that is super interesting to look at. So let's go to the conclusion, everybody, real quick. Sorry, phone should be off. Annoying. I always thought I did airplane mode. As I always say, never have more than 10% in a proxy. Never have more than 10% in any one kind of place for security reasons. Miners are much riskier than pure Bitcoin. I always say pure form always, but they are fun to trade. And if you do make a lot of money on a miner, then it's time to reallocate to other assets. Now, what makes this really exciting, though, why everybody should consider miners, is as follows. First of all, mining is a very difficult business. It requires large upfront investments, equipment maintenance, upfront payments, electricity costs, compliance, you name it. There's a lot of stuff that goes on behind the scenes. Number 2, mining stocks are being bought because they have a familiar way for traditional investors to get exposure to Bitcoin. We've got banks up in Canada buying mining stocks and a whole bunch of others because that is their easy on-ramp. And it is also, they do not invest in Bitcoin miners for stable cash flow. They invest in it as a proxy for Bitcoin. Very important to remember that. Also, Bitcoin miners are an asymmetric bet tied to Bitcoin with the average growth. This is so important. The last bull run, miners did a 38x, while Bitcoin only did a 7x of growth. So when you can time it right, there's a lot more to be made as well. And the market cap of most Bitcoin miners is very small, ranging from 25 million to 1.5 billion, which makes them attractive opportunity for investors. Many of the Bitcoin miners are also under the radar of Wall Street, so they don't even know of them. And all it takes is a little bit of investment to make the actual stock blow up. But that is key. And remember, it is possible to get way better returns on Bitcoin. But I think the most important thing is this is the time to invest in miners when the Bitcoin price is going up. You don't want to be in miners when the Bitcoin price is going down. And that is the big message of today, everybody. So a lot of numbers, a lot of tables, a lot of charts. Hope you appreciate it. Hit the like on the way out. Thank you to the mods in the chat. Let's just check in to see if there's any. Yes, and CleanSpark is up even higher in aftermarket. It's now $5.05, up 3%. And it'll be a fun day tomorrow in the market. So hope you enjoyed this. And I'll see you all later. Thank you for everything.